Hello, everybody. My name's Grant Peterson. I'm the Senior Stakeholder Relationship Tax Consultant for the IRS here in Burlington. I'm here today with Travis Claremont of CVOEO, and we're going through the 4491W basic exercises. So I'm presenting on the second one, which is Winsor, Washington. It's if you notice on the bottom of the page, it'll say Washington on it. I thought I would try to approach this by showing you the way I always take these on, and we'll start with the interview intake sheet that a taxpayer prepares when they come into the site. So here's his name. You can see there's no spousal information listed. So that's important. Address, and you get down to the things that say, are you a U.S. citizen? So he is. That's going to be important for certain types of credits and so forth. His date of birth, 1972. That makes him 42 years old. He was not totally and permanently disabled. It does say here that he was a full-time student during the year, and that's going to be important when we look at education credits. Not legally blind. You don't see anything else. He's marked here as single. So you might want to do some probing to determine if he qualifies for what filing status he would qualify for. If he was actually single at the end of the year, it's possible he could be head of household or qualifying widow or widower. He has a child listed here who, based on the notes that we'll look at in a minute, was his son. And it says here, anyone you supported but did not live with you last year can be listed here, or everyone who lived with you last year. So it's one of the two, and I think that's important because you're not looking at just whether or not there's somebody listed here. You need to do a little more probing in order to see that. It is interesting to note that the number of months that lived in the home last year was 2 months. So did not live with the taxpayer more than half the year, and that's going to be important. It is his son, is a U.S. citizen, single, not a full-time student, not totally and permanently disabled. Pretty young kid, 02, that makes him about 12 years old. So if we go to page 2, the value of this is to kind of give you a pretty good idea of what kind of things you need to probe with. So you'll see here in the income section, you have wages and salaries, and you have an interest and dividends listed, and everything else is marked no. So taxpayers make mistakes on these, so it's just good to say that's your, something like all you had was the wages and interest, no other type of income, and then same for expenses. So he's marked no for everything except post-secondary education expenses, which we noted on the front page of the return, and no qualifying life events. It does say that he direct deposit, that he would like direct deposit, and if we continue to scroll down, there's the Social Security cards, and then there's the check that shows the routing and account information that you'll need to enter. At that point, you'll sit down with the taxpayer, kind of talk some things over with him. The interview notes is Winsor is single and pays child support for his son Montel. Winsor's son Montel lives with his mother, Angie Scott, 10 months out of the year. So did not live with Winsor more than half the year. That's important for things like earned income credit and dependency. Winsor did not itemize deductions last year. Winsor tells you that he is working, towards his bachelor's degree in computer information systems. He is a second-year student, and he is not a convicted felon. He's never claimed an education credit before, and he's also a full-time student last year. He paid $5,000 in tuition fees to Walker University. And it gives the information for Walker University. So, few things to note here. And if you went through your 4012, it would lead you to these things. So I'm just going to point them out since I see them. So he's in his second year of a bachelor's degree. So that's post-secondary education, second year. That's important for qualifying for the American Opportunity Credit. Not a convicted felon. There's a requirement for that credit that you can't have a felony drug conviction. So we know that he doesn't have one. He's never claimed an education credit before, and that's important for the American Opportunity Credit too, because you can only claim it for 4 years. And so since he's never claimed it before, we know he's going to, if he otherwise qualifies, he'll be able to take it. That won't disqualify him. And he was a full-time student during the year, also important, and he paid $5,000 in tuition and fees. So we already talked about his refund going into a checking account if he has it. Did not qualify for the premium tax credit, and taxpayer independent had minimum essential coverage all year. That's going to be pretty common for taxpayers, I expect. For most of them, they're going to qualify for that, and I'll show you how to enter that on the TaxWise software. So So once we've logged in, and we're going to log in, of course, by going to the Lincoln Learn site here, and then clicking on this tab for the practice lab. You're going to type in under the password learn TWO. That stands for TaxWise Online. So it's learn TWO. And then if you have set up an account previously, you'll enter your login information. If you have not set up an account, there's a link there for you to do that. We've already prepared this return, so I'm going to click on all returns here. And we're looking at Winsor, Washington. Incidentally, it's worth noting, maybe I'll go back and just show you that. The way that it works for these numbers for the taxpayers, the first three numbers are given to you, and the rest are your ID number that you get when you register in the Lincoln Learn. So when you register, instead of getting a user name, you get a user number, and that user number is what you put at the end of all of these scenarios when there's X's, because you need to complete the numbers. So you'll see that come up over and over again in the documents and so forth. So I thought what we'd start with is let's take a look at the dependency issue. So can you or your spouse be claimed as a dependent on someone else's tax return? So we have no reason to think that he is eligible to be claimed by anyone else. That is, that Winsor, Washington, the taxpayer, is eligible to be claimed by anyone else. So that's no. Was the person married as of December 31st, 2014? So he was not married. So we're going to go to step 4. Was the person a U.S. citizen? I'm sorry. I'm going to back up because I just read that wrong. Was the person married on December 31st, 2014? That is the child, his son in this case. And that's no. That would only be relevant perhaps for older dependents, older children, or if you're claiming somebody as a dependent who's not a child. Was the person a U.S. citizen, U.S. resident alien, U.S. national, or resident of Canada or Mexico? That's a requirement for claiming them as a dependent. So if the answer in this case was yes, we got that from the first page of the intake sheet. Was the person your son, daughter, stepchild, eligible foster child, brother, sister, half brother, etc.? It's his son. So we know he's good there. And we're going to go to 6. Was the person under age 19 at the end of the year and younger than you? That's yes. Did the person live with you as a member of your household except for temporary absences for more than half the year? And that's a no. And that means the person is not a qualifying child. So you'd come down here to see if it's qualifying relative. Is the person your qualifying child or the qualifying child of another taxpayer? You would find that if you went through this, because the mother would be able to answer all these questions the same, except for this one, did the person live with you for more than half the year? And that would be a yes. She would be eligible to claim him as a dependent. So the precedent is given to somebody who has a qualifying child. So for that reason, he's not able to claim his son as a dependent. So if we go to the main information sheet, you'll start by entering all the information here. Address, date of birth, occupation, excluding income from Puerto Rico. This should be marked no on all your software. Single, claiming an exemption for himself, which he can do because no one else is eligible to claim him as a dependent. And you'll notice there's no dependent information entered. No dependent information because he doesn't qualify, because his son is a qualifying child for the mother. You'll also notice here the routing and account information that he provided on that check. This is where you enter it. And once you've done all that, then you go and you start with the income documents. So in this case, these are the income documents. We have just the 3 of them. I always start with the easiest, and that's the W-2, the one pretty much everyone has. W-2 gets entered exactly as it looks. So if any of this information is wrong, you're still going to enter it exactly as it looks. If the wrong information, like let's say an employer accidentally added a 0 to the federal income tax withheld and you're getting a $20,000 withholding and that seems wrong, you send them back to the employer to get it fixed. But if some Social Security, wages withheld, any of that's wrong, or there's a typo, you want to put it in exactly as it is. And you do that by either clicking this add button and looking for the W-2 and clicking add, Or, as I usually advise, particularly new people, go to the line where you report that and then link to it. There's a little arrow here. You click that, and there's a link. And that'll give you a new form that you'll need. When you pull that up, and I've already completed that, you'll see it's right here. If the numbers don't match what the expectation in the software is, and you'll see that with Social Security wages and so forth fairly regularly, you can change it, but they'll have you check this box that you verified it, that you verified that the numbers are as they are on the W-2. So EIN number, and again, those last digits are coming from the user ID that's provided to you when you sign up for the Lincoln Learn. Entering the employer's name, address, etc., wages, federal withholding. These will be calculated entries. Sometimes you'll see other entries on the W-2 that you put in down here, but we don't have that here. And here's the state wages and withholding information. Okay, so let's go back to the 4491W and talk about this one. This is the dividend distribution, $71.50 in ordinary dividends, and of that $71.50 is a qualified dividend. That's important because a qualified dividend is taxed at a lower rate than ordinary income in most cases. So what this is actually saying is that there's $71.50 in dividends, and of that $71.50 of it is a qualified dividend, meaning qualified to be taxed at the long-term capital gains rate. The software will take care of that, but you need to be sure you enter it. There's also this thing here that says non-dividend distribution, and that's odd. But I did find, if you look on page D1 in the 4012, it'll say 1099 DIV, box 3, non-dividend distribution is a return of basis, not taxed until all cost is recovered, must reduce cost of these distributions at the time of sale. That's a little beyond a basic understanding of dividends. But the basic thing here is that this doesn't need to be entered on the tax return. The taxpayer needs to be aware of it when they go to sell whatever the stock or capital item is. But if you see something strange like this is a good time to get your site coordinator involved, because it may be unfamiliar to you. But I'm just pointing it out. So we're going to go ahead and enter it. And the way to do that is to go to the front of the 1040 page 1, find your dividends, ordinary dividends, right? So here's the line. And if you click it, you'll see the link, and it'll bring you to the Schedule B, interest in ordinary dividend income. And on this sheet, the top part 1, is for interest. Part 2 is for dividends. You enter the name of the company and the amount. That's all there is to it. And then you close it, and when you go back to the page 1, you'll see here where it says include qualified dividends from Form 8014 listed on the Schedule B. Sorry, that one shouldn't be filled out. That's 84. Oh, whoops. So please excuse me. This entry's wrong. All right, so yeah, so we've put, all right, we've got that down there on there, and if we look at the Schedule B, you'll find it here. Okay. So now I'm going to go back to the 4491W. And if you look at this interest income, so there's interest income of $82.77 and an early withdrawal penalty of $22. So what that means is that a taxpayer had $82.77 that they would have been entitled to, but they took the money out early, and so the bank kept $22. So what you're actually reporting here is what the taxpayer netted. And in this case, that's $60.77. So that's here. And that should be 60. This is put in wrong, so I'm going to fix it. So that's 61 when you round, and that's because you're taking into account that that early withdrawal penalty. Okay, so we've got our types of income, and now the only thing left to address is this issue here, which is the $5,000 in tuition and fees that he paid. So again, I like to come back to this sheet, and if you look at the 4012, you'll see you can look at the education credits to look at the qualifications for them. So the American Opportunity Credit, generally speaking, a person who's eligible for the American Opportunity Credit should take it because it gives them a larger return than the Lifetime Learning Credit. The software will calculate it both ways and give the person the benefit of the bigger credit, but you need to make sure they qualify. So this one, as we said, is only available for 4 tax years, and it said that he's never taken the credit before, so he's okay there. 40% of the credit is refundable, meaning the taxpayer can get back more money than what they paid in taxes. So that's important for them. That's not true for the Lifetime Learning Credit. They have to be pursuing a program that leads to a degree or other recognized educational credential, which it said that he was. He's getting a computer science bachelor's degree. And the student must be enrolled at least half-time for 1 academic period during the year. And it said that he was a full-time student in the interview notes. No felony drug conviction, said that he didn't have one. And the credit gets reduced if you have AGI above certain levels. So this is very important that you verify their eligibility before going back to the return. And then what I like to do is go to the second page of that return, find the credit section, which is here, and then link to the education credits. Just like that. If you click New, you'll get an 8863. I've already entered one, so it's under Existing. And it brings you to page 2. In page 2, you fill out the taxpayer's information. You enter the question about whether they get a 1098-T. That's what most people are going to have, and you're just going to enter that 1098-T and that information just as it is on the 1098-T. In this case, he doesn't have that. Usually they're going to have some kind of statement at the very least. And you're going to have to answer these questions. Has the Hope Scholarship Credit or American Opportunity Credit been claimed for the student for any 4 tax years before 2014? We had already addressed that. That's no. Was he enrolled at least half-time? That's yes. Did they complete the first 4 years of post-secondary education? That's no. First 4 years of post-secondary is typically a bachelor's degree. And if they've completed their bachelor's degree, that's going to knock them out for the American Opportunity Credit. And then here's the one about the felony drug conviction. Once you do that and you put in the qualified expenses, the $5,000, it'll do all the calculating. Here's the American Opportunity Credit. And then if you go to 8863, the front page, here's the refundable portion calculated and non-refundable portion. So giving them the benefit of the greater credit. And you can see that showing up on page 2 of the return, because here's the non-refundable portion, and here's the 40% that is refundable, showing down here as a payment. We already talked about entering the routing and account information, so that's all you've got. You're done. You can run your diagnostic and then get a quality reviewer to look over the return before electronically filing it. Also important that you explain to taxpayers when you're preparing these returns that they are responsible for the information on the return. So if they omit something or they don't look carefully at it, I think there tends to be the impression that the preparer is responsible, but that's not the case. The taxpayer, when they sign the return, is attesting to its accuracy and is ultimately responsible for what's on it, and it's important that you tell them that. So I hope that's helpful to you, and I really appreciate you taking the time, and thank you as always for volunteering.